Richard Hemming here from Under the Radar Report. Today I want to talk about the other side of our business, Blue Chip. Specifically, it's Blue Chip's 200th birthday, and we are very proud. As a gift, we're giving you issue 200, our special report on banks, which includes in-depth analysis on CBA, NAB, ANZ, Westpac and Macquarie. We kicked off Blue Chip in early 2017, so 9 years ago, and here we are still going strong. One of our subscribers called yesterday and said that he was sad to be cancelling, but that soon our future reports would be going to an empty inbox. He said that the reports gave him invaluable advice and that the 40 stocks we cover had been very carefully chosen. I can testify to this. We certainly are very careful in the stocks we pick, because Blue Chip is about quality, and this is the point of Blue Chip. So all those years ago, one of the sectors we first focused in on was banks, and we're happy to say that our recommendations, CBA, NAB, have done very well. They've returned something like 6% a year, those returns accelerating in the past 3. But interestingly, over that time, their return on equity, so their profitability, has been in decline. What's also interesting is that seeing this, many analysts in stockbrokers have hit the sell button for a number of years now. So they've missed out on a lot of those gains. We've been holding banks and in some cases buying, only pressing the take profits button recently. So Westpac's CEO in the 1990s was the highly regarded Bob Joss. He famously said that bad loans were made in good times. Well, this is true. But I think those broking analysts overestimated the good times, and they overestimated the probability of bad times. So they don't run a business. They don't face cost pressures. Many analysts miss the point about the banks. There hasn't been a recession in Australia for many years. Interest rates have remained low. The biggest beneficiary of this are house owners. The other biggest beneficiary is the banks. 7 out of 10 mortgages come from the big 4. A bank is a balance sheet, essentially. And our big criteria when it comes to small cap investing, well, our first criteria is the strength, the solidity of that balance sheet. So this gives us a unique understanding of how banks should fit into a portfolio. The report that we've written is worth reading because it's accessible. Investing isn't for the sharp suits on Wall Street, on Collins Street, on George Street. It's for people like us to achieve our dreams. Investing is personal. That's why it's worth your precious time. Download our report and get analysis on CBA, NAB, ANZ, Westpac and Macquarie.